This is Alan Bush with ADMIS with the Daily Financial Forecast for Thursday, January 21st. In the stock index futures, we did see a sudden spike to the upside. This after Mario Draghi, president of the European Central Bank, at the conclusion of their policy meeting, indicated that there is a possibility that the central bank of the Eurozone could be adding more stimulus to its economy. So easier credit from the ECB very much is a factor affecting equity markets, not just in the Eurozone, but globally. Also, for a brief moment, it was central bank policy that dominated and not prospects of a weakening Chinese economy and lower oil prices. However, we do believe that once the oil market does stabilize, that eventually we will come back to the dominant influence on the stock index futures, which is the interest rate environment, which remains extremely accommodative and extremely supportive for equity markets globally. Now, moving over to the currencies, seeing the dollar index advancing very quickly and the euro currency falling very sharply. With the comments from the ECB president, Mario Draghi, he indicated that there are additional downside risks to the economy of the Eurozone. He also made some comments about inflation being rather slow to increase. So there's a very strong possibility that this year more stimulus is coming from the ECB. So the dollar very much advancing on this news, the euro currency quickly falling. Also, we do believe that the dollar index will probably continue to advance at least through the first quarter of this year, which is in keeping with a seasonal trend. Also, now we are seeing a little pressure in the British pound as the feeling grows that the Bank of England will not be able to raise interest rates anytime soon, maybe not at all. And we are seeing some pressure in the yen. If you recall, the yen just yesterday made a new one-year high, much of this due to flight to quality buying. However, comments in the overnight trade from Bank of Japan officials indicating some concern that the central bank may be forced to add more stimulus in one form or another, possibly lowering rates, and that would be bearish for the yen from an interest rate differential point of view. Now, moving over to the interest rate futures markets, we did see some gains, especially at the long end, when Mario Draghi made his bullish interest rate comments. However, since then, more recently, we have seen a lot of these gains eroded, especially now with crude oil prices, which were lower this morning, now coming back to higher. Also, we are seeing stock index futures firming. Also, we do remain in very much overbought territory in the 30-year bonds, with a lot of buy stops taken out over the last couple of days. Also, the probability of a rate increase at the March 16th meeting now diminishing rather rapidly. Early in January, in fact, in the first week of January, the probability of a rate increase at that meeting was as high as 55%. We are now in the low 30% range. So the probability of a rate increase very much diminishing. We also have to believe, which is a minority view, that the Fed may be raising rates only 1 or 2 times this year. Most analysts are looking for 3 or 4 times. So, good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.